Hi, I'm Dr. Druv and welcome to my YouTube channel. I'm a Canadian physician and this is a channel not on medicine, but on all the other aspects needed to live our medicine lives. Today we're going to be talking about capital gains and why it's important to know about capital gains, what are capital gains, and how we can utilize it. So, capital gains refer to the profit made from the sale of a capital asset, such as real estate, stocks, or bonds. The difference between the cost of the asset and the price it was sold for is called the capital gain. So if you had a house for $100,000 and you sold it for $150,000, the gain has been $50,000, and that is a capital gain. Now, why is it important for physicians to understand? Well, capital gains essentially help us understand how they are taxed, because there are investments where they can earn a rise in the asset price, and that will be classified as a capital gain. So for example, rental properties, stocks, at some point for the purpose of retirement or transitioning to a new asset or property will have to be sold, and the way they're determined is that there is an increase in the price. And capital gains are sometimes referred to as the most efficient tax to pay in some circles. But again, this is not tax advice or financial advice, but something to know and keep in mind. Understanding the tax implications of these capital gains and the sale of assets can help you make informed decisions about when and how to sell these assets. Capital gains can play an important role in your retirement planning. For example, if you have investments that appreciated in value, you may be able to sell them and use the proceeds to fund your retirement. It's important to note that capital gains is subject to taxes or are subject to taxes, so it's important to consider them when you are selling that particular asset. So how does one go about calculating capital gains? Again, my goal is not to make you an expert, but as I said, I like tools. I like ways to understand how I can make it simple for myself. So here is an example that I use for a capital gain, and I've stated that the capital gain is $50,000. So going back to that example, we had a house for $100,000. Over time, it grew to $150,000, and then we sold the house for a $50,000 profit, so to speak. So there will be taxes that are owed. Every person's situation is different, but in the normal case scenario, that $50,000 gain would have to be taxed in some form. And a lot of people, I would say, get scared of capital gains because for whatever reason, with someone's wisdom, the way the capital gains are taxed is 50% of them are taxed. So in this case, for example, they're called taxable capital gains, the portion of the capital gains that is taxed. And then there's also a non-taxable portion, which is the other 50%. And that is essentially forgotten, so to speak. So it's important to realize that that $50,000 is not taxed at 50%, but 50% of $50,000, which is $25,000, which is the taxable capital gains, is taxed. The amount that is taxed. So you can see here that $25,000. The way it's calculated is it's added to your income, and then your income is, as you know, has income tax brackets. And so on the income tax bracket of your taxable income, that is the rate that is then multiplied to 25,000. So in this case, I took a very high income, and so I went to a high income tax rate of 48%, and so $25,000 is taxed at 48% to give you $12,087. Now there's different ways of saying the same thing. And this is what I want to emphasize. You could say that the full $50,000 is taxed at your capital gains tax rate, which is 24%. Well, 24% is 50% of 48%, right? Or you could say half the gain, which is $25,000, is taxed at your ordinary income tax rate, which is 48% here, the ordinary income tax rate, which would still give you the same number of $12,000. So you could say the same thing in, I suppose, a half a different ways, or two different ways over here. But it's important to realize that the tax rate is not 50%. 50% of the gain is taxed at whatever tax rate is determined based on various calculators. So hopefully you find that useful. And so in conclusion, having this knowledge is to your advantage, because then you can structure your investments in a way so that if you have a large capital gain, you could use it against capital losses, which is a whole another topic on its own. So in conclusion, capital gains are an important concept to understand for physicians, especially for their investments and the impact it'll have on your financial situations. They are subject to taxes. They are calculated using some basic principles that I've shared with you here. Again, this is not specific to you. It's not financial advice or tax advice, but it's important to speak with your accountant and obtain that advice so that you can at least use your skills in being able to manage your own finances within reason. So hopefully you find this video informative. You've found the tool to be informative. If you'd like to use the exact frameworks used by affluent physicians to take back control of their time and money, then check out the link in the description below. I make these videos because our mission is to help fight burnout across the world in 10,000 physicians, at least by 2025. And I wanted someone to hold my hand through this wealth-building journey here. This is my kind of legacy for that. Come and join a free community of like-minded physicians, full of free resources like the one that I had shared, like cheat sheets, calculators, and everything in between to live the life of your medicine dreams. Thank you very much for listening. Thank you for taking the time, for doing what you're doing, providing care to your patients, for providing services as a high-income earner. Don't forget to like, share, and subscribe, and I'll see you in the next episode.